What if I told you that the most important financial paper of your life isn't a paycheck, a credit card bill, or even your bank statement, but a piece of paper you've likely never been taught how to read? It's called a mortgage quote, and most first-time homebuyers trust it blindly. It looks clean, professional, and reassuring. But what it doesn't show, what it hides in plain sight, could cost you years of debt, regret, and missed opportunity. A mortgage quote isn't just paperwork. It's a decision that could shape the next 15 to 30 years of your life. Yet most people don't understand it, don't question it, and don't realize they have the power to change it. This video is not just about explaining terms, it's about giving you back control. Stick with me, and by the end of this video, you'll never look at a mortgage quote the same way again. Part 1. What is a mortgage quote? The hidden nature and purpose behind the numbers. A mortgage quote is often presented as a helpful estimate, but it's much more than that. It's a sales pitch disguised as clarity. It shows your interest rate, loan amount, estimated monthly payment, down payment, and closing costs. But here's the problem. It's not standardized. That means every lender can format, include, or omit details however they want. Even worse, it's not a commitment. The numbers you see today may look very different tomorrow. Most quotes are based on assumptions, ideal credit score, zero complications, and often exclude key fees and taxes. So if you take it at face value, you're not comparing reality. You're comparing marketing. What lenders won't tell you is that the way these numbers are presented is meant to make their offer look more appealing than it actually is. And if you're not trained to read it critically, you might walk into a 30-year debt trap believing you just made a smart financial move. Understanding the true nature of a mortgage quote is your first defense against manipulation. Because if you're going to borrow hundreds of thousands of dollars, don't you deserve the truth up front? Part 2. Breaking down a mortgage quote. What's really inside that piece of paper? Let's dissect what actually shows up on a mortgage quote. First, there's the loan amount, how much you're borrowing from the bank, which is usually the home price minus your down payment. Then there's the interest rate, which could be fixed or variable. That rate dramatically affects what you'll pay in total over the loan's lifetime. Then we see the monthly payment, which often looks deceptively low. Why? Because most quotes show the principal and interest only, omitting taxes, homeowners insurance, HOA fees, and more. This leads buyers to believe they can afford more than they realistically can. Next comes closing costs. These include lender fees, appraisal fees, title insurance, and sometimes even junk fees hidden under vague labels. And there may also be points, fees paid up front to reduce the interest rate. Many buyers don't understand points and mistakenly assume they're mandatory. Finally, the APR, annual percentage rate, is the true cost of the loan when fees are included. This number is the most important for comparison, yet often gets ignored. If you're not aware of all these elements and how they interact, you risk saying yes to a loan that's structured more for the lender's profit than your success. Part 3. The costly mistakes first-time homebuyers make with mortgage quotes. One of the most dangerous beliefs buyers have is that the lowest rate is the best deal, but that low rate may come with conditions: high upfront fees, strict credit score requirements, or worse, a temporary teaser rate that jumps dramatically after a few years. Another trap is trusting the monthly payment number without knowing what's included. If your quote doesn't account for taxes and insurance, you're looking at a number that could be hundreds of dollars lower than your actual bill. This leads people to overextend themselves financially, thinking they can afford more than they really can. Many buyers also assume that fees are fixed, but that's not true. Almost all fees are negotiable or optional. Processing fees, underwriting fees, and even some closing costs can be challenged or removed. But most people never ask. The truth is, mortgage quotes are built on psychology. Lenders understand that if they present numbers that feel right, you'll sign without looking deeper. Don't fall for that. When it comes to buying your first home, what you don't know can hurt you and cost you dearly. Part 4. Smart Comparison. How to read and evaluate mortgage quotes. Like a pro, comparing quotes isn't just about finding the lowest rate, it's about understanding the full cost of the loan. First, request an official loan estimate, which every lender is legally required to provide after you apply. This document is standardized, which makes comparison fair and accurate. When you have multiple loan estimates, don't just look at the rate. Focus on the APR, the cash to close amount, and the total cost over 5 years section. These 3 lines tell the real story: how much you'll pay, when you'll pay it, and what it will actually cost. Also, look at optional add-ons like mortgage insurance, discount points, and prepayment penalties. Some lenders hide high costs in these sections, assuming you won't notice. Don't be afraid to negotiate. You are not a burden, you are a customer. Ask lenders to explain every fee. Tell them you're comparing quotes. Often, they'll improve their offer immediately when they know you're informed. This is your money, your home, your future. Learn how to compare with clarity, not confusion, because the smartest borrower isn't the one who accepts the first offer. It's the one who understands every word on the page. Part 5. The transformational lesson, from passive buyer to empowered financial thinker. This isn't just about understanding mortgage quotes. It's about building a mindset that protects your future. When you learn to ask questions, challenge assumptions, and look deeper than the surface, you change the way you interact with money forever. You stop being a target. You start becoming an informed participant in your own financial life. That one piece of paper, the mortgage quote, is a gateway. Once you learn to decode it, you begin to see every financial contract differently, with clarity, intention, and power. No one teaches this in school. Most parents don't teach it either. That's why most people get trapped. But you don't have to be one of them. You're here because you want more than just a home. You want financial peace, long-term freedom, and confidence. And it starts with learning what others ignore. Keep building this habit of awareness. Because when you learn to understand the fine print, you stop signing your future away and start shaping it. These lessons are more than just financial tips. They are a call to awareness, empowerment, and long-term thinking. In a world where millions fall into debt traps simply because they weren't taught how the system works, this content aims to change that. It's not about fear, it's about clarity. It's about giving you the knowledge to see through polished mortgage offers, to ask the right questions, and to take back control of your financial future. Every viewer deserves the opportunity to make informed decisions, especially when it comes to something as life-altering as buying a home. That's why these lessons are crafted not only to educate, but to inspire, to remind you that financial freedom isn't a luxury, it's a responsibility, and it begins with understanding. If even one part of this video sparks a shift in the way you think about money, then it has done its job. Because real transformation doesn't start with money, it starts with mindset. And that's exactly what these lessons are, here to ignite. Everything shared in this video is intended solely for educational and informational purposes. It does not constitute financial, legal, or professional advice. Viewers should consult with a licensed financial advisor or mortgage professional before making any decisions related to loans, real estate, or personal finance.